Okay, so we don't want to take up your lunchtime, so we're going to start this class for GASB 84. If you have been with us for a few years for our Maze Live, this is going to be the third year that we talk about it. So we thought maybe we would change up our approach a little bit, talk less about the theories and more about just in practicality, how do you implement it? So as we go through the slides, please do just think about what you currently have in the fiduciary activities funds and what other activities your agency may have that may be qualified as a fiduciary funds as you implement GASB 84. Okay. So the first, the thing that we'll cover is the couple of GASBs, GASB 84, and then GASB 97, and then also the implementation guide. 2019-2 is actually a very useful information for GASB 84 implementation. So please do take a look at that. Now, what we will talk about today is identifying the fiduciary activities, reporting the activities in the fiduciary funds, and we will quickly go over GASB 97 that has become effective last year, actually in June of 2020. But it has certain impact on the determination of the component unit. So we wanted to remind you of those. And then we have some specific examples. Okay. So first of all, identifying the fiduciary fund. So two types of activities that under GASB 84 that they consider those as fiduciary activities. So one type of activities is the component units activities, and then you have all other activities. Now, we are not going to go into how to classify how to determine there is a component unit because we only have about an hour. But keep in mind that GASB 14 has the guidance there, and it has since been amended many times. So Amy Meyer has given me a really good tips years ago is instead of looking at the GASB statements, look at the codification, because every time the statement is being amended, the codification will be updated. So the first thing you need to do is when you have these activities, you're wondering if they should be fiduciary activities under 84, is ask yourself if they should be a component unit. So let's say that you say, well, yeah, this is a component unit. Then the second question to ask yourself is, are the assets held for pension or OPEB obligation? So this is just a warning. This is I'm very nerdy. I'm sure most of you know. So this class has a lot of flow charts. So just bear with me. I'm hoping that this will help you classify your fiduciary activities easily. So then you ask yourself, okay, well, if it is it qualifies as a component unit, and are these assets held for pension and OPEB? If it is a yes, then if you answer yes to any of these activities, then that should be reported. These activities should be reported as fiduciary activities under GASB 84. So these three questions are these the assets held for pension plan administered through a trust? Are they held for OPEB plan administered through the trust, or are they assets from entities that is not part of the reporting entity, but used to accumulate for pensions or OPEB arrangements? Okay, if it is a yes for any of these, then report the activities in a fiduciary fund. Now let's say that it is a component unit, but then these assets are not held for pension or OPEB arrangements. So you come to this no conclusion. Then you ask yourself these questions. If any of them is a yes, then you report the activities in a fiduciary fund. Otherwise, report these activities in with the primary government, with your governmental funds or your enterprise funds. Okay. So these three questions are the assets held in a trust or equivalent and the government is not a fiduciary? Oh, I'm sorry, is not a beneficiary. Are the assets held for the benefit of individuals and the government does not have administrative involvement or direct financial involvement? Now, the definition of administrative involvement and financial involvement are that administrative involvement, the examples are like if you're monitoring compliance, you're determining eligible expenditures, or you have the ability to exercise this discretion over like how the assets are allocated, then you have administrative involvement. Direct financial involvement, an example will be if there maybe your agency has the matching obligation, so then you have a financial involvement in this, with this type of activities. Okay, the third question is, are the assets held for the benefit of organizations or other governments that are not part of the financial report entity? Okay. So let's say that you looked at the activities in questions and you go, okay, well, they're not for component units. They're not, they don't qualify under as a component unit for my agency. Then you're getting into a situation that you are now using the criteria for other activities under GASB 84 to determine if they should be a fiduciary activity. Okay. So the very first question is, does the government control the assets? So what does that mean? So two examples, like what it means by control the assets is either they hold the assets or they have the ability to direct the use, exchange, or employment of the assets to provide benefits to the recipient. In that case, you're holding the assets. If you don't hold the assets, then activity would not be reported. But if you hold the assets, they don't qualify as component units, but you hold the assets, then you ask yourself this other question. Are the assets held for pension or OPEB arrangements? So if it is a yes, then you come to this other criteria. These four types of activities will be considered other activities of fiduciary funds under GASB 84. So they are a pension plan administered through a trust, an OPEB plan administered through a trust, when assets from other entities are accumulated for defined benefit pensions, or when assets from other entities are accumulated for defined benefit OPEB. Now, many of you are starting to think about, what about my what about those OPEB plan we have with Cerber? Does it count? So we will have specific examples for most of the California agencies at the end of this presentation. So we are going to go through some real life example. What happened if you have a single employer plan OPEB? What happened if you have a Section 115 trust? So we will address that at the end. Okay. So let's say that you look at those activities, you go, it's not a component unit. We do hold the assets, and but they are not held for pension and OPEB arrangements. Then what? So this is the part that last year I helped a client implement GASB 84, and I also helped a few clients to start the implementation. I think this is where it gets kind of complicated because there's a lot of, you have to fulfill these three requirements and then you have to fulfill like one of these three. So I came up with this glorious flowchart that who doesn't love, right? So if you cannot see the fonts, hopefully there's a link on the chat so you can download the PowerPoint that you can actually see this. So recap. you have activities that is not a component unit, that is not that you have control of the assets, but it's not for a OPEP or pension arrangement. So these are all the other activities in question. Then you come to this chart and you ask yourself, are the assets derived solely from your agency's own source of revenue? If it is a yes, then you report it with your primary government, your enterprise fund, your governmental funds. If it is a no, then you ask yourself another question. Are the assets derived from government mandated non-exchange transactions or voluntarily non-exchange transactions? That was very long. Then you go to this, and if it is a yes, then you ask yourself, are the assets derived from a pass-through grant for which the government does have administrative involvement or direct financial involvement? Again, direct administrative involvement examples will be if you determine the eligible expenditures, and direct financial involvement, an example will be if you have like matching resources. If it is a yes, you report it with your primary government. If it is a no, you come here and then you go, okay, you report the activities in the fiduciary funds if one or more of these characteristics match your situation. If not, you report them with the government or business type activities. I know this flowchart is very complicated. I put it here, not thinking that you're going to remember the whole thing, but hopefully that will help you walk through it as you implement your 84, that you can walk through each of your current fiduciary fund one by one through this scenario and figure out where you put it under GASB 84. Okay, so these characteristics are, the first one, you have to fulfill all three of them. Administered through a trust in which the government is not a beneficiary, dedicated to provide benefits in accordance with the benefit terms, and legally protected from creditors of the government. Okay, second characteristic, are the benefits of individuals and the government does not have administrative involvement or direct. So basically this is saying that you have these assets and they are for the benefits of the government and other government and individuals, and your agency does not have administrative involvement in it. Okay, or maybe these assets are for the benefits of the organizations or other governments that are not part of the reporting entities and do not derive from government's provisions of goods and services. Okay. All right, polling question number 1. Okay, so polling question number 1, we want to know where you are at with the implementation. 8% of you are already done, so congratulations. I'm thinking you're here to get your CPE, which is great. Thanks for joining us. And then another 22% are almost done. And then some of you may not have time to get to it. And in my experience, it's actually not very difficult to implement it. It is just takes time to kind of dissect all those different activities and being able to sit down and go through it one by one. And if you are our audit clients, please do reach out. I have a lot of my clients that would actually make the determination and then go through the scenarios with us to make sure that they have made the determination correctly. Okay. All right. Now, after you've gone through that, then now how do you report those activities? So under GASB 84, there are two types of fiduciary funds. You have the trust fund that has three subcategories. You have the pension and other employee benefit trust funds. You have investment trust fund. And so those are the external investment pools for the investment trust fund. And then private purpose trust fund. And then you have the custodial funds, which is everything else, those other activities that we had talked about. So there's an exception. If you have a business type activities, and then they may report some assets with a corresponding liability that should have been reported under GASB 84. So as long as your entity is holding these assets less than 3 months. So when you receive the assets, if you're expected to hold it with less than 3 months, the exception is that you can still report that with the enterprise funds. And just know that in running your cash flow, if it is very significant additions and deletions, you do have to have a separate line for those items. Okay. Okay, so now we have a statement of fiduciary net position, and then we have a statement of changes in fiduciary net position, which a lot of you do have that already if you maybe have like a successor agency fund. So the difference in this is that if you see it here, I totally copy and paste this from the GFOA Illustrative Comprehensive Annual Financial Report, and there's a link here. It's a super awesome example annual report that you can use. A lot of times when we need to address we don't say that anymore. We have to address GFOA annual report award comments. What I do is I look at this example to see what the expectation is. So in here, you can see that there is a column for the pension and other employee trust fund, investment trust fund, and private purpose trust fund, which is basically all your other trust funds that don't fall into these two categories, okay? Again, keep in mind that investment trust fund, which doesn't happen I don't think I have a clients that have it, but if you do have that, if you have an investment pool, here, this should only contain the external portion of the investment pools and the individual investment accounts that are held in trust, okay? Now, then there is another external investment pool here. Why is that? So under GASB 84, they say, well, let's say that you do have an investment pool, but they don't fit into the definition of a component unit under your current GASB codification. Then you may have these activities to be classified as a custodial fund. So the requirement is that if you have that situation, you need to break them out from the rest of the custodial funds. Okay, so they have to. So this is this is supposed to be like a summary fiduciary fund statement of net position that appear before the footnotes. So even there in the summary level, this has to be separated. Okay. All right. Then on the income statement side, the new thing is that now your custodial funds also will be participating in these income statements. So it depends on how your general ledger is set up. We have clients that already have that type of information on their chart of account. So you may be okay. But I do have clients that will have lumped everything into just a revenue line and expense line. So you want to make sure that you review your current setup to make sure that it allows for proper reporting under the new GASB. So GASB 84 did say that, let's say that you have this, I'll have to go to the next page, hold on. Okay, so one thing to notice is that there has to be separate display of investment earnings, investment costs, and net investment earnings. So it is all here. There's interest, dividends, then you have a total, and then it will be less investment expense. Okay. And then if you have pension or OPEB, the reporting requirement, you need to follow GASB 87 or 74. But for custodial funds, let's say that, again, if you are expecting to hold those assets for less than 3 months, then you can have one aggregate total of the additions and one aggregate total of the deductions. All right, just really quickly, a reminder, GASB 97, paragraph 4 and 5 became effective last June. So that will affect your determination of the component unit. So the first one has to do with the absence of a governing board. So if you recall in a very rough criteria, don't quote me on this, look at the GASB, but basically to determine if there's a component unit, you look at if there's a physically, is the government physically accountable for this, other entity, and then can they impose their will, and then if they provide a financial benefits or a burden to this other entity, right? So in the imposing of the will, one of the examples was, well, can they appoint the majority of the board? But what if there's no governing board? So GASB 97 kind of addressed that. Let's say if there's like no governing board, but then your board kind of functions like the governing board, then is essentially like you will have the voting majority of the governing board. And then paragraph 5 is talked about the applicability of financial burden criteria in GASB 84 paragraph 7. And it says that it only is applicable to defined benefits, pension OPEB plan, because it was kind of administered through trust, because there was some kind of question about that. So they just want to clarify that it's only applicable to defined benefit pension or OPEB plans administered through trust. Okay? All right. Now we have polling question number 2. Oh, so we do have some of our friends here that has external portion of investment pools. An investment trust fund. Okay. Cool. Okay, so it looks like the majority of you have pension trust funds, and then custodial funds. And then we still have a lot of friends here that have investment trust fund and private purpose trust fund. Okay, all right, so that's perfect. So we're going to go into some examples here of practical examples. So I'm taking these examples from the CCMA white paper. Okay, let me get rid of this polling thing here. So in case you are not familiar with CCMA, CCMA is a joint effort of the Cal CPA government Governmental Accounting and Audit Committee and the League of California Cities to promote sound accounting and auditing procedures and improve the quality of reporting by municipalities. Okay, so they're very helpful in issuing white papers for California specific issues. So their position here is that there is a implementation guide out there for GASB 84, but they want to kind of look at some unique examples of situations faced by the California municipalities and then address those as such. So this paper was issued last year in March. So of course, we're a bunch of accountants, so we have disclaimer before we go over anything. Just make sure, okay, this is not authoritative. So this is just a point of view of the CCMA, but is not authoritative. It summarizes a lot of the information for GASB 84, but it does not contain all the information of GASB 84. So you do need to look at, when you in your implementation, you do have to go back to the GASB 84 and the implementation guide to get this to answer the technical question. But this is a very good reference white paper. Okay, so at the end of this white paper, they have like these 4 sessions that have Q&As, and I really like them because they're very practical. So they talked about successor agency, they talk about OPEB plans, pension plans, investment trust funds, and other fiduciary activities. So we have about, maybe like 20 minutes. So I'm going to try to get through some of these examples, and then we'll stop at like 11:50, and then we can answer your questions. Okay. So the first question is, well, how about successor agency? Is successor agency still considered a fiduciary fund under GASB 84? So the short answer is yes, and this is why, because your city or your agency is holding the assets. They direct the use of the assets, and then while the assets not derived from the own source, is the beneficiary arrangement is so I'm sorry. Okay, so it's a yes, and then this is the reason why I don't think I have time to go through it. And then the second question is, under GASB 84, how would the financial activities of the successor agencies held by the city be presented on the financial statement? And it will still be a private purpose trust fund, because remember that there are 3 types of trust funds. Anything that don't fit into the other 2 types, the investments or the pension or OPEB, is going to be called private purpose trust fund. Okay. Okay, I'm going to skip this slide. And then, oh, actually, I need to go back here. Okay, and then let's talk about the OPEB plans. These are the other post-employment benefits plans. So there are 3 steps to determine the appropriate reporting. And this is our suggestions. This is how I would do it. So first of all, you want to kind of determine whether the plan is administered through the trust. And then you want to determine if the plan is a component unit. And then if the plan is not considered a component unit, then we go back to those questions. Remember that glorious flowchart. Does your agency control the assets by holding the assets, or have the ability to direct the use and exchange or employment of the assets? So what I was confused about when all these OPEB plans and pension plans, when a couple of years ago when 84 came out, I was confused about what a plan is. Actually, under in this situation, if you don't have a trust, you don't have a plan. So, you know, during your everyday life, when we talk about OPEB plan and pension plan, we think, well, as long as we have a benefit package, we have a plan. But under this determination is that like the plan has to be a trust. So if you don't have that, you don't have a trust established, then you don't have a plan in this situation. Okay. Okay, so now we're going to go over some California specific plans example. The first one is a lot of you may have your plan in the CE RBT, and then maybe some of you will have it under PARS. And these are considered Asian multiple employer plan. Okay. So for the CE RBT, the recommendation is like, is this not a component unit and is also not a fiduciary activities, mainly because that you really don't have any controls of the assets, and you're not a component unit, okay? Because you don't really like your agency cannot impose your will onto the board of the trust. Okay. And for PARS OPEB plan, so these are I want to make sure, because there is also single employer plan under PARS too, but these are the PARS OPEB plan that has an investment pool with the other agencies. So if you have that situation, again, you're not really a component unit, and then you cannot have control of the assets. So the conclusion, or the recommendation, it's not conclusion, is that no, it's not a fiduciary activity. Okay, so you still have to report the, you still have to fulfill the reporting requirement of the current GASBs, but you're just not in the fiduciary activity funds. Okay. All right, how about standalone OPEB plan? So these are the ones that you basically have your own plan, nothing, your investment is not pooled with other agencies. Sometimes you will have a, you may put this under a PARS also, or sometimes you may have an other administrator. So in this case, that it is considered a component unit and it is a fiduciary activities, because you do have control over the assets, and then you can impose your will onto the trust board, and that makes it a component unit here. Okay. All right, for pension plan, it's very similar to how we determine the OPEB plan. So a couple of things. Again, if you don't have a trust, you don't have a plan, so you want to determine whether the pension plan is administered through a trust, then you want to determine if the pension plan is a component unit, and if the pension plan not considered component units, how about, you know, this GASB 84 criteria again. So California specifics, we want to talk about, we're going to go through like single employer plan. We want to talk about age and multiple employer or cost sharing plan. So the most common situations, you have a CalPERS or a county pool, or your plan is with CalPERS or the county, and also PARS, and we will also touch on the defined contribution 401A plan. All right. So for single employer pension plan, it is considered a this is very similar to what we just talked about in OPEB. It is considered a component unit, and it should be reported under the fiduciary activities, mainly because that you do have control over the assets, and you it also fulfills the criteria of the component unit. Then if your plan is with CalPERS or the county pension plan, it is not a component unit because you have no control of the assets and you cannot, you don't have voting majority of the trust board. So it's not considered fiduciary activity. Keep in mind, you still have to report it under your current GASBs, but just for GASB 84, it's not, that doesn't, it's not considered fiduciary activity. Okay. Okay, then the PARS pension trust. Again, this is not the single employer plan. This is when your investments is pooled with the other people. It is not considered a component unit and not a fiduciary activity. All right. Okay, and then defined contribution 401k plan. No voting majority, no control of assets, so it's not component unit, not a fiduciary activity. So now I wanted to talk about this question because I think this is getting more and more popular when when your agency have like a Trust A and Trust B. So what that means is like the Trust A is your original like pension trust or your OPEB trust. And then there is a separate trust that's set up. There is a Trust B, and the Trust B can only be used to make contributions to Trust A, okay? Before 84, it is very disappointing to a lot of you that you cannot really net the assets in Trust B with the net liability in Trust A. So we get asked pretty frequently, and that's why this question is on the CCMA white paper. Well, how about for GASB 84 implementation? Can we now net the assets of Trust B with the liability in Trust A? And the answer is no. So you will still report the assets of Trust B like how we have reported in the past, which is an investment, and it has to be shown separately from the net pension liability or net OPEB liability of the Trust A. Okay. All right. So then some of you may have a single employer supplemental plan administered through PARS or other trustees. Should that be reported as a fiduciary fund? So these are the assumptions we are making that, as we understand it, that that plan that you're considering, trying to make the determination, the assets is not pooled with the other the government's other plans and held in a trust under GASB as defined by GASB 67 paragraph 3, and your agency, your government determines the amount of the contribution made to the trust, and then these other criteria. If you fulfill these criteria, then yes, then this plan, this supplemental plan should be reported in the fiduciary fund. Okay, polling question number 3. Oh, look at that. A few of you are so kind that actually say the audit is what you most look forward to for the rest of the year, and I appreciate you lying about it. Look at that, the holidays. I have to say that that's also what I'm looking forward to. 15 people say the audit is what you look forward to the most.
That's what I'm looking forward to the most too.
I know, see, I mean, and it's like, it's so warm and fuzzy, but I almost want to figure out who you are and send you a hug because, oh, I guess you can't do hugs anymore, but send you a teddy bear.
Virtual hugs.
Oh, virtual hugs. That because you're so kind that you actually, making an effort to make us feel better.
Nice.
I know, right? Okay, so we have about a few minutes. I'm not going to be able to go through this question. I found this session fair, these other fiduciary activities like extremely fascinating because the the reasons behind it of why they should or shouldn't be fiduciary funds are very fascinating. I put the summary here. Please do not just take what I say here and just use it. Do you look at the white paper? Do you look at the implementation guide? Um, this is just to pique your interest into looking into it, further. Okay, so I will just highlight a few of them, I think. So the first question has to do with this SB 1186 for the state law that so let's say that so like I think this is like any example. Let's say that you're imposing now requiring business that get a permit or your license in your city. Let's use the city as an example. That you're requiring these businesses that come in and do business with you, that you impose a fee for them, and a portion of it goes to, let's say, the county, and then your organization keeps the other portion. So should it be recorded as fiduciary activities? Okay. And then should we share the results here, or we have already done so? Or? Okay, perfect. Thank you. I need to move this out of the way. Okay, so then should it be fiduciary activities? So the answer is no, because it's your own source of revenue, right? So what you have to do is put it in the funds that run, you record these activities. Let's say it's the planning department, that impose the fees. Then $3 of it should be recorded. Let's say it's a 3-to-1, like you keep $3 and the state takes $1. So the $1 should be recorded as a deposit payable until you cut the check to the county, and the other $3 should be a restricted revenue if there's a restriction attached to that $3 that you impose the fee on. Okay. So let's say that the number 5.02, maybe you have donations that your youth advisory board have collected, and then it's supposed to fund, your organization's program. That should be reported as revenue because you're funding programs that of your own organization. Okay, so you're the beneficiary of these assets, basically. So how about if you're collecting these donations and then you're just giving it to some other nonprofits? Well, then in that case, yes, they should be fiduciary activities because it is you just basically, if you don't have, again, if your only function is to distribute these resources to the nonprofit organization and you don't have any direct financial involvement or other administrative involvement in it. Number 5.04, how about those retentions payable? Sometimes you may put it in a trust fund, and it's like maybe it's in an account that is in both your name and the contractor's name. Are those fiduciary activities? So the recommendation is that it should be a no, because you're using your own, the assets is derived from your own source of revenues. You're using your money to pay for the project. So what you should record is actually a retention payable in the project funds. 5.05, development or building deposits required by your agency. So sometimes, and I think it happened a lot when the economy is doing well, or maybe if you have a lot of land to be developed by developers. So a lot of times agencies may require a building deposits or development deposits. And it used to, a lot of them put it in the agency funds. But because it is actually funding the activities of your organization, let's say that the deposits is supposed to be for plan review. And so what is essentially is an advance payment for the service of a city. So that should be recorded and in the funds that these planning activities should be happening, or your building activities should be reported. Okay. All right, let's see. So we have about, let me see if I can go through them. Maybe we'll talk about this payroll one. Let me see where it is. So they have, okay, so I want to talk about 5.10. Sometimes there are like taxes or other payroll liabilities that some of you may use a agency fund to record them. And the recommendation here is that no, because these are assets that derive from the government's own source of revenues, and the government has administrative involvement with the assets. And also the tax and the other payroll related liabilities are actually the liability of the government. So it should be reported in the primary government as a liability. Okay. Should I stop here? What do you think, Whitney? Because we have 5 minutes.
Yeah, sure. There is one question. I don't know if you want to jump in on that or.
Sure. Yeah.
Okay. So the one question is this: I want to confirm PAR's OPEB plan and CERBT. We disclose in the footnotes, report in the required supplementary information, and consolidate it with the general fund, ? The consolidation with the general fund was new this last fiscal year by our auditor. So
let me see if I can click on the question.
I think this is a Plan A and a Plan B question.
Oh, okay.
Or a Trust A and Trust B question is what I.
Yeah. Oh, and then I do want to say something though. I forgot to mention for the OPEB. If you recall, a couple of years ago when GASB, oh gosh, I forgot. Is it 73, Amy? I forgot which GASB.
Plans with no assets?
No. Wait, gosh, 74. That's right. So do you remember a few years ago, if you are one of our clients and we're trying to like help you implement, so for the CE, the SERBET plan, we say, okay, don't put it in the fiduciary fund, because at the time the determination is who's the plan administrator. Because PARS came out and said they are not the plan administrator. So a lot of our clients put it in the fiduciary funds, but under 84, you no longer need to do that. So you can take that out. And I forgot to mention that. So right. To get back to this question so what happened is I'm thinking, okay, so the first part of the question is, if you have a PARS OPEB plan and is a pool, like your investment is pool with the others, not a single employer plan, or you have a OPEB plan with the CERBT, you will just follow whatever footnote disclosure you have right now, and you do not need to set up a fund on your fiduciary fund. If you have a plan B, meaning you have an other trust on the outside of this, like a primary trust, that you have kind of accumulated assets there for this plan B, trust B to pay into trust A when your agency decide is the correct time, then the assets in the trust B will be recorded in your primary government fund. May it be like a general fund, or some of you may have a internal service fund set up, or maybe an
made the contribution.
Yeah, so that will be exactly. So that cannot be netted. Does that make sense?
Yes.
Oh, okay. All right. So the last part of this, let me go. I just have some tips and hints. Okay, again, don't be overwhelmed by it. So first take inventory of what you currently have in your fiduciary fund. And for which of those, for each type of those activities, just kind of go through the criteria set forth by 84, because I think that's like the hardest thing. Is to just sit down and kind of go through those. And then for activities that you need to report with the primary government, find a home for it. And that's usually is like if those assets is used to fund certain activities, maybe your building activities, your planning activities, put it in those funds. If it's supposed to fund a capital projects, put it with the capital projects. And then don't forget to also step back and look at other activities that is not currently in the fiduciary funds and kind of ask yourself, should they be, am I missing anything? So it's kind of two-way situation, look at what you have right now and look at what is not included right now and do that determination. And finally, again, for funds that remain in the fiduciary funds, make sure your GL accounts has sufficient information to have proper reporting. Do they have separate line items for all the revenues and expenditures, and for the investments on your financial statements in fiduciary funds, you're supposed to disclose each type of investments. It can be something you just type in, or maybe you want to have different GL line items for that. Okay. Okay, finally, resources. There's a link for the CCMA white paper here. GASB online is always very fun. This is where we usually do our research. And then there's the pronouncement link and the implementation guide link. Okay, so are there any other questions? Let me stop this. Oh, okay, so somebody will ask if we can provide the slides.
Yeah, so let me
okay,
post.
Thank you. So with that, I want to congratulate you for finishing half of our May Live. So we'll see you again tomorrow at 8:30. Again, if you need, if you have questions and answers, you're always welcome to send it to us. And then, or if you need a link to the survey again. So I want to thank Amy, Whitney, and Stephanie for helping to put this together. And I'll see everybody tomorrow. Thank you.
Thank you.
Thank you.